Hi, this is Damien Qualter with Property News and Views for week ending 28th of August 2009. Back with the Property News and Views videos after 2 or 3 weeks off for the holiday season. I hope everyone's had a great holiday season and raring to go for the big rundown now, I guess, till Christmas. Let's get straight into it. The first of four articles this week, buy-to-let performance stabilisers. Standard & Poor's have provided more positive news on the UK housing market last Friday, saying that there were signs of stabilisation in the performance of securities backed by buy-to-let mortgages. Delinquencies of UK residential mortgage-backed securities fell for the first time in 2 years. Obviously, this is the lagging effect of now things catching up in terms of the finance market. Other data on Friday also showed that UK home repossessions eased in the second quarter. The number of homes repossessed by lenders in Britain fell to 11,400 in the 3 months to June, compared with 12,700 in the first quarter, according to CML. Second article, another positive piece of news. Rightmove, things are on the up. Reported in London this week, UK property website Rightmove reported that the UK housing market looks to be in the early stages of recovery, although house prices in the hardest hit parts of the country are likely to continue falling. Basically, the managing director, Ed Williams, has warned of a split market where some areas of the UK are prospering, while other areas continue to languish in the UK recession. There are some, obviously, unemployment black spots where you have a lack of demand and an oversupply. In more profitable areas, prices have actually risen. He also believes that UK house prices have risen between 5 to 10% since the start of the year. The CML said gross mortgage lending was up 26% on the month in July to around £16 billion, although the CML believes this could be just a temporary resurgent. So again, positive news, which it's all moving very slowly but surely towards I think the housing market appearing a lot better than it was certainly a few months ago. Third article this week is basically the gross mortgage lending up in July. As we've mentioned in the last article, it's estimated about £16 billion worth of lending, up 26% from June, but down about 36% on the previous July. This is further evidence of a modest improvement in the market over the summer after an exceptionally weak winter. Activity is still seen to be subdued on any historic comparison. This is the lowest July lending since 2001, and 11 billion lower than the July average over the previous 7 years of 27 billion. Lending volumes remain consistent with our forecast of 145 billion in gross mortgage lending this year. Advances generally picked up in June and July as anticipated for the summer period. This is strong seasonal rise over the summer months and is generally seen a trend over previous years. CML economist Paul Samter said that most of the indices point to house prices rising moderately in the summer months, and the CML's gross lending estimate 16 billion is the highest level in 9 months, and consistent with the rise in house price approvals. Final article this week, landlords catch up with arrears. CML again given an upbeat report to the UK buy-to-let market, showing that the number of landlords with arrears on mortgages now is improving significantly during the second quarter of 2009. Loans in arrears for the 3 months fell to 2.49% of all buy-to-let mortgages, down from 3.06% in the previous quarter. 21,600 new loans were advanced in quarter 2, which is 5% up on the previous 3 months. According to the CML, buy-to-let now represents 11.5% of the total value of mortgages outstanding in the UK. So that's it really for this week. Just another one little snippet of information. Remortgage has tumbled 15% as landlords opted for the lender's standard variable rates. at the end of their fixed rate deals, obviously taking advantage of the low interest rate. So again, obviously it's been 3 or 4 weeks since we last spoke, but it continues the trend of property market slowly but surely making a recovery, albeit a slow one. And I think over time that we'll be certainly heading, definitely in the right direction. Excellent time to buy, as I've been saying the last few weeks. People are still offering properties at very, very low discounts, at high discounts, and mortgage rates are still, at an all-time low in a lot of instances. So excellent time to buy, yields high, everything on track for a serious landlord to make money. Okay, that's it for this week, and I look forward to speaking to you next week. It's Damien signing off for now.